Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 2nd of February 2026. Well, a lot to get through this morning. Precious metals were absolutely hammered. Worst move since 1921, apparently, in silver, down 30%. And look, there was a number of different reasons why. Trump nominated a Fed chair in Kevin Warsh, which was largely expected to be his nomination, but he's deemed to be hawkish, which we'll get to in a moment, which is not particularly true. But I think one thing that everyone skipped over as well was the inflation numbers. PPI was incredibly hot on Friday, up 0.7, expected up 0.2 in the core. That really that's a massive move that no one's really talking about at the moment. And we went into a partial government shutdown over the weekend as well. So this one's not like the last one. They're just defunding Department of Homeland Security, the Pentagon, and the Department of Transport, which includes those air traffic controllers. But everything else is largely funded until September, so it won't be a big deal. But Kevin Warsh. So just a bit of background on Mr. Warsh. Morgan Stanley M&A. He was in the Bush White House. Was the youngest ever Fed governor, actually, at 35 years of age, which, considering the average age of people on the Fed, he's like a toddler. Was active during the 2008 financial crisis and is often regarded as the Fed's Wall Street liaison. So, I've just obviously highlighted the parts in green here that are probably positive for stocks. And the parts that in red that are not so much. But his Fed history is he backed the initial 2008 emergency actions, but he later opposed the continuing of quantitative easing, especially QE2, which I categorically agree with him on, partially responsible for a lot of the issues, with inflated asset prices and inflation over the course of the last 15 years. And look, he's not a traditional hawk. So he's completely fine with lower rates. So really, he's not a hawk. He's just not cool with extended QE and just the absolute ballooning of the Fed balance sheet, that's not hawkish. That's just common sense. So extended QE, but what it means for stock markets is rate cuts are still coming. But on the downside, there's far less likely to be a Fed backstop unless there is a systemic issue with the banks or the financial system. Much more inclined to let things probably have to take their medicine, which is a very key part of the buy the dip market thesis for the last since 2011 2012 sort of area. I think that something that people want to be very mindful of. He's expected to favour small balance sheet for the Fed, cautious use of unconventional tools, and look, he'll probably want to narrow the Fed's control, which obviously then not screw around with fiscal policy. That's one thing that obviously Trump will be pushing big time, and there's no way this guy gets the job unless he's probably committed to rate cuts and getting rates down. Some of his the Trump side of the aisle see him as independent-minded, which is highly unlikely. And critics are worried he'll be too aligned with Trump's political rate preferences. Look, it's a dangerous job to be taking, considering Fed pals currently undergoing federal DOJ investigation. Trump just goes pretty hard after everyone that doesn't agree with him. So. I would imagine that would be the independent-minded part might be wishful thinking. I dare say he'll be fairly in line with the Trump political. But the one thing about the Fed, and the RBA for that matter, is that we've seen blowouts of deficits, etc. And look, I guess the ballooning of the Fed's balance sheet is sort of enabled them to be a bit more of the adult in the room sometimes. But yeah, I think I don't mind the appointment. I think it's probably the best of both worlds that you're ever going to get. But he's been increasingly talking about how there should be rate cuts. and in recent times, and politicking for the jobs. So I don't think it's anywhere near as hawkish as what everyone's saying. So we saw a bit of that memory chip part of the market, SanDisk particularly, up 25% intraday, ended up down on the day after their earnings. So we've seen a lot of these memory chips head lower. There was a little bit of concern around Jensen saying that they haven't signed on the dotted line with OpenAI. That I think took the wind out of the sails for the memory chips. Consumer staples and Tesla was up, but it's kind of marching to its own beat at the moment. But the more defensive sectors were definitely up a fair bit more on Friday night, and we saw obviously these. Jensen since come out over the weekend and said, he didn't. That's not what he said, but I think anyone's sort of clambering to really. I think the market has at least penciled a target on the back of Sam Altman, if not painted a target on his back, and we'll sort of see that continue. Newmont down nearly 12%. Now we're going to get, and we've still got, we've got neutrals in the Dow, a slight buy in the S&P on the daily technicals, a neutral in the Nasdaq, and a sell in the Russell, which is a pretty sharp turnaround, to be honest. Because Russell's been going okay. We did manage to eke out a small gain for the month, and it'll be interesting to see how things play out over the course of the next sort of 3 or 4 weeks, because there's still a fair bit going on. Okay, so silver down 32%, gold down 12, down 22 for the week, down 5 for the week. Platinum was down 22. For the week, down 19 for the day. Copper basically finished the week flat, but just fell, with everything else. We had a % rally in the US dollar, obviously conversely, and then Bitcoin as well, down 7%. Coal had a rally, 5%, which was a bit sort of counter. Obviously, that was shut while the US was open. Excuse me, and then iron ore largely flat. Oil was largely flat as well. So let's give some context here. This is for the week. Precious metals. Gold's only down 2.5. Silver down 18. Platinum down 21. Which platinum's very thin and whippy, but obviously we've been to like massive highs at 50. We touched 5,600 or very near in gold. Silly prices in silver, etc. But for the month, sorry, you'll have to excuse that. This is for the month, not the week. Silver's still up 19, gold up 12, platinum up 4. So, what it really only does come down to whether you've basically bought the hype at the highs, and that'll be but today will be very interesting, because for that sort of move to happen, we've seen a lot of mints around the world have shut down silver sales. We've had that massive premium, and supposedly the PBOC's been buying precious metals on Friday night, but the Asian market was shut. It's been trading at a premium. But look, for the love of God, don't go on X or Twitter at the moment because there are more theories than about what happened on silver and gold on platinum on Friday night than what's at Area 51, to be honest. And maybe there's a grain of truth in some of them. But realistically, we're at a silly high. Margins are extraordinarily high. It would have gained a lot of momentum to the downside. We had a hot PPI number, which really does hurt the case for rate cuts. That means the Fed's definitely not looking at. If we get a high CPI number on the back of that as well, we're not looking at rate cuts next month either. A supposedly hawkish Fed, and then like I said, the precious metals are always volatile at highs. I've been saying that for weeks now, and you just got to be very careful and run. There's a article on Mosaic around trailing stops. It's a pretty good lesson in when to have a trailing stop, and and basically when to be trimming on the way up. You may miss out on some, but whilst this is what's called a Six Sigma move, which is, I don't know, once in a million years sort of scenario. But we've had like four of those. We went into it on the podcast on Friday. Go back and have a listen there. We were always aiming for that, which was at the start of a unicorn style price target around that up 400%, which was around that 110 to 114. We've been pretty vocal about it, and we were out of silver, into silver miners, and out of our gold miners in Newmont and into Aussie Tech at the end of last week. So if you want to be getting those updates and not getting crunched in these moves, holding on for one more day, get yourself to mosaic.mpcmarkets.com.au, and you'll get these things in real time. And the recommendation service is very reasonable at $150 a month, and you get 4 services there. So just a bit of context here. We have had these 35%, 30% drop-offs before, and just not in a day. 400% rally in 2008, 2011. We had a 35% pretty sharp drop, and then we had a 32% bounce, but there was no new high. I mean, if I want to go back and use 1979, 1980 as an example, which is very extreme, and not really that similar, and probably too far in the past, to be honest. We really didn't recover to make a new high. In 79.80 they did, because 400% was only half, or it was only 2/3 of the way up. So miners did maintain a 10 to 15% premium, but it slowly drifted about 35% lower over the course of the next 12 months. But miners were a little bit better than that, and that's where if you think the move's going to keep going, the miners are going to go with it. But if it is the top, it's the better risk reward way of playing it, as we've seen in this example. And for anyone who watches these these morning podcasts and sees the podcasts we do on a weekly basis, we've been saying this for quite some time, and it does pay to do a bit of your history lesson. So Verizon was a really good performer. The government did go into shutdown on Friday, but we've got Palantir tonight, Walt Disney, AMD, Google, Amazon over the course of the week, Pfizer, Eli Lilly, and a few of the European banks. But we've got RBA tomorrow. A few of the major economists have softened their views a bit, just saying they can, and that's sort of my view as well. I think it doesn't hurt them to wait 5 more weeks and see another CPI number. We had a pretty big influx of European travellers, English in particular, with the Ashes and things, and Christmas, and higher fuel prices over that period is always a given, etc. So maybe the RBA might wait 4 or 5 weeks and just see what whether another inflation number shows a bit of seasonal spike there, but 3.8 is concerning year on year. So it'll be pretty line ball, I would imagine, tomorrow. We've got some manufacturing and services data. ECB rate decision on Thursday. I don't think the market's really watching ECB rates, to be brutally honest. And then you've got your US employment numbers at the end of the week as well. And I'll just we've had some pretty soft soft employment numbers over the course of the last few non-farms numbers, and mainly in the revisions, but we're expecting up 67,000, which I wouldn't say is overwhelmingly strong, and it'll be a pretty important number, I would have thought, overall, because any strength is really going to take rate cuts off the table. But we'll just sort of see, I guess, what happens there. The jury's still out. So it's going to be obviously pretty depressing on the open for those of you who've got gold miners, silver and gold, etc. I would imagine you'd probably just want to see things settle down. I don't think you need to be panicking. I normally, it's dropped 30%. It's a once in 100-year move. You probably don't want to be making any major decisions at these sorts of lows here at the moment. And we really only did see sort of gold, the gold miners drift off. Nowhere near as much. Silver miners was only down half as much, or less than half as much as what what silver was. So I'd probably let things settle down, see how this Asian session goes, because I think in the light of day, we want to see where that demand's really coming from those BRICS nations, and they were closed on Friday night. And then it feels like a bit of shenanigans going on in that silver market, to be brutally honest, depending on what which conspiracy theory you want to take on board. So if you want to know more, get your Mosaic. You can either go to mpcmarkets.com.au/Mosaic and sign up there, or you can just go to mosaic.mpcmarkets.com.au. The 1 month free trial will actually end today, which was a bit of a mistake on my behalf. I didn't switch it off over the weekend, so yeah, this is really your final day to get that 1 month free trial with all of the with all of the recommendation services, etc. Or you can follow us at MPC Markets at Spotify, YouTube, Apple Podcasts, etc. But we've got some in-depth articles on Warsh, etc. Some stuff on trailing stops, some investor education, and you'll be able to see what moves we're making here in the market at the moment. So have a great day, everyone. Stay strong for those holding those mining and precious metal stocks. It's going to be one of those days, but it has been a pretty good run, and you just got to sort of see the forest for the trees and not make any silly decisions. So obviously, general advice only. You got to get advice. I don't know what everyone's positions are. I'm not taking into account their personal circumstances. But we'll chat again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.